Hey, what's up guys? Welcome back to another video. In this one we have a trade recap. Haven't done one of these in a long time. Mostly because a lot of times I record the trade recaps for the Swing FX members. But we have one today, a trade recap, sort of a short term, I'm not going to call it a scalp, but definitely a shorter term trade for me. And because of that I risked a little less because I was taking it on the 1 hour chart. Normally, I like trading off of the 4 hour because the 1 hour is more prone to small spikes higher and can easily take out stops. So for that reason, I risked a little less. Just a disclaimer there. But let's jump right in. GN. Why did I take a trade on GN and more specifically a short trade? So let's get right into it. Starting off with the fundamentals per usual. So we have sort of, I guess we'll just draw this out. So we have this upward trend that we've had. Reason being is there hasn't been really any strong, let's look at it on the 4 hour. There hasn't been really strong risk on flows for a week or two, right? And risk on, aka optimism, helps out the New Zealand dollar. And the pound has been very strong, mainly because a Brexit deal was signed. So overall, there's good sentiment there. And we have vaccinations, and the UK is handling that very well. The UK is doing very good with their vaccinations, which is also a positive. So, good things going on with the pound. Also, we have had US dollar weakness, and money flows out of the US dollar. Usually some of it will flow into the pound and naturally help it up. So for those reasons, the pound has been quite strong lately. And that's why we've seen this uptrend, right? Sort of a weaker New Zealand dollar. We've also had the RBNZ, which is the central bank for New Zealand. Now I'll get into the New Zealand dollar fundamentals. They have been sort of flirting with cutting rates for a while, going into negative interest rates, which has basically hurt the New Zealand dollar and its sentiment for months now. So the New Zealand dollar, even though it's benefited from risk-on flows, has been struggling for a while now, especially against its brother, the Australian dollar, right? Because the Australian dollar just has some better fundamentals, right? Because they don't have that negative interest rate looming over it. Because the RBA, Central Bank Australia, did not say they were interested in negative rates. So that's what's called a central bank divergence. And anyways, lately, analysts have sort of scaled back that view. And even the RBNZ has sort of scaled back that view as well, that they're not too sure if they even need negative rates anymore. And a lot of analysts have even predicted a rate hike, meaning they're going to increase interest rates next year in 2022. So very hawkish, even potentially looking at tightening monetary policy in the coming months or year, which is positive for the New Zealand dollar, right? A complete 180 flip. And for this reason, only in the last week or two have we seen analysts scale that back. So I would expect sentiment to be fairly positive for the New Zealand dollar, at least for a short time period, so the market can sort of price this new information in, right? So that's why I was bullish on the New Zealand dollar. The pound was a bit more of a wild card on the trade because, as I said, it has been stronger lately. And the reason I took it is because it seemed like it was a bit more neutral. It was sort of ranging. It wasn't super strong. Just looking at the price action on, the pound. And so because there was sort of, in my opinion, a more neutral pound and a strong New Zealand dollar, I felt more comfortable shorting GN in the short term, right? Because long term, the pound could very well continue on its strength. So, I'm not looking for a huge move down to here. I was just taking a little trade, trying to capture on this New Zealand dollar momentum. Alright, so now that I covered the fundamentals, right? New Zealand dollar I was more bullish on it because of the tipping expectations for the central bank. The pound I was expecting to be neutral, so it was a shorter term trade. And then we finally broke this consolidation, which all of a sudden it's now looking a little bit more bearish, right? And so it pulled back quite aggressively. Right, pulled back quite aggressively, sort of retested this trend line, which would have been a good entry, but I was not watching it at that point. Right, it was only this week I really started to get more bullish on the New Zealand dollar. So, yeah, basically it could not break this low, pulled back, and it was right here that I decided to enter, right? We did get a pullback into this trend line that was respected. We got a pullback into this, these clusters of moving averages. And yeah, so I drew a fib from this low here to this high. Given the nature of this wick, it didn't seem like a good idea to draw, the fib from there. And so I was targeting the extension down here. So I got in on this rejection. Stop was just above this last high, right? So we had lots of moving averages as resistance. Not to mention we have this general area that it was rejecting off of, right? Acted as support numerous times, flipped, now acted as resistance, and I was targeting down here. So around like a 2.4 RR. So, decent risk reward. Would have liked it to be higher, and it could have been higher if, let's say, my stop was like here, but I wanted to give it some room and chopped around for a bit. Then at night, London session, the pound sold off. I was not necessarily expecting it to be that bearish, but naturally the New Zealand dollar gained strength, which was my main driver for this trade, and sold off right to TP quite quickly. And so it was a beautiful trade as it was rejecting this low here, right? As it was rejecting this support, I did manage risk and move my stop above these highs, right? So still risking a little less. Wasn't quite at break even because I figured it could just wick up there. But luckily, I didn't have to worry about all that because it rejected and then subsequently sold off. And so it was a great trade. For those that were wondering why I took it, these are the reasons, right? It was a bit of a riskier trade. Was not a trade I would have risked a whole lot on. So I did limit my risk on this trade, given that it was shorter term and the fundamentals were a bit mixed for the pound. Had the pound fundamentals been bearish, this definitely would have been something I would have traded with more size. So that's sort of how you can use fundamentals to manage risk better as well. And for those that might be wondering, the reason I didn't hold it to down here or further was we have this strong support, right? We had this strong support area that it would have a hard time breaking. The fundamentals, again, were not strong enough. So this is how I use fundamentals to sort of plan out my trades, right? Because this was exactly what I was expecting for it to sell off down to there. And that's all that I was really predicting. Because after that, it could easily chop around if the pound started gaining strength, which is a real possibility. And, I trade based on probability, which is what, you should be trading off of. And the probability of it just selling off and going down here, given that the pound fundamentals, does not make sense, right? However, short-term imbalance because of a stronger New Zealand dollar made more sense. So anyways, I hope you guys learned something. I hope you guys enjoyed. If you did, smash that like button. Hit that subscribe button because I know a lot of you guys are not subscribed. And I will see you guys in the next one.
I come from a town where most of the people are so close-minded. They go into school and they work in a job, but they don't even like it. I won't be put in a box. Nobody telling me what I should rock. Nobody telling me what I